Uh, Hello everyone. I'm just making a short video regarding how income tax is calculated. Many people have misunderstanding that oh, I have a lot of income. That means that I need to pay a lot of taxes. But this is actually not correct. So people's tax usually calculated based on how much they actually make. Suppose you made of $100,000 or more than $150,000 in a tax year. So for the first $50,000, your tax will be 15%, and when your income goes up, that means that between $50,000 to $100,000, your tax will be 20.5%. And if your income goes more high, that means that if it is more than $100,000 to $155,000, then it will be 26%. So if you have a $150,000, that doesn't mean that you need to pay 26% on the whole amount. That's not actually correct. So you just only need to pay the amount, what you extra amount, what you make excess uh, of your regular amount. And there are also two type of tax. One is federal tax, and one is also British Columbia provincial tax, right? So you can see that for British Columbia, if you have a taxable income between 45,654, then your tax rate is 5.06%. So the more you make money, the more you need to pay for the excess amount, not for the whole amount. So if you make your taxable income is $91,000, so between $45,000 to $91,000, you need to pay 7.70%. So many people have misconception about this. So I just trying to make it more clarified to people. And some people also ask me that. Okay, why is CRA giving us money back in every year? Because you have a tax-free income. Suppose in 2020 year, if your income was tax-free income was 13,000 to $9, but it actually gradually increased. So in 2023 it has been $15,000, and in 2022 it has been $14,398. That means that. Every year they actually make a revision. So in 2020 it was 14,398, and 2023 it has been moved to $15,000. That means that you do not need to pay any taxes if you may if your income is $14,398. But what actually happens that when you file or when you work for any company, they usually deduct taxes as the regular 15 to 20% for your overall gross income. So that's why you will receive some money when you file your tax return. So tax return is very important. And there is a good news for people who are actually lower income in Canada, because there is a GST credit. There is a GST credit limit in Canada also. So if your if your income is less, then if you are eligible, you will get GST credit of GST credit has this family structure. So how much will get and based on your total amount. And if you are single, you will get $467. And there is also climate action credit. So overall, if you have very less income, you can easily get $600 to $700 by three installment from the Canada Revenue Agency. So that's why people get money from the CRA. So um, and many people has a lot of income. So people usually ask that, okay, I know how to file tax return, but I do not know how I can save taxes. That means that you want to pay less to the government. For that purpose, Canada government has a RRSP. So what does RRSP mean? Registered Retirement Savings Plan. So if I click RRSP, so if you every year the RRSP limit is 18% of the previous year's total income, or or the less of the amount, and there is some also rules. So every year when you receive your notice of assessment, you will receive, you will can find that how much you can make contribution to the next year. So suppose in 2022, when you submit your tax return for 2022, you will now see that how much you can contribute for your RSP account in for 2023. That means that there is a room for every year, and it is also carried forwardable. So if you do not contribute to your RSP account, it can be carried forward. That means that you can in future contribute to your registered retirement savings plan. And RSP has a good benefit is that um, everybody wants to buy home. So if you want to buy home in Canada, you need to pay a lot of installment down payment. So if you withdraw money from your RRSP account up to $35,000, you do not need to pay any tax on withdrawal. So when you deposit money for your RRSP, suppose this year you have a $10,000 limit, and you can deduct $10,000 from your total taxable amount. That means that you do not need to pay any taxes for the $10,000 you make for 2022. And the last day for contributing to an RSP account is March 1. So if you want to make contribution to an RSP account, you just need to go to bank RBC or your TD Bank Canada or any bank you have account, and tell them that you have this amount of limit. They will help you to create a RSP account, and you can make contribution to that amount to your account. And there is also tax-free savings account. So in Canada, there is a tax-free savings account you can open, and every probably it is $6,000 every year. So if you do not contribute your tax-free savings account, it always carry forward to the next year. The tax-free savings account usually not tax deductible. That means that if you contribute $6,000 each year to your TFSA. That means that if I write down tax-free savings account TFSA, so you will not be able to deduct any taxes for the TFSA. But there is a good news is that for TFSA, if you in future if you buy any bond stock, or if you buy any share of any company, that means that if you have any taxable gain, that means you make a profit from the TFSA, but you do not need to pay any taxes for the any taxable gain. So this is also a great tool. So people who actually do not have a lot of money, making more than $100,000, and if you have a lot of savings, then you can contribute to TFSA. But it is not tax deductible. But in future, if you invest that money, and if you have any taxable gain, that means that you make money. Suppose you buy stock of Apple, you buy stock of Microsoft, and you may double the money what you actually invest, but you do not need to pay any taxes from that amount. So this is a very good tool. And in Canada, both Canada and USA, you must have to pay tax. You cannot deceive tax, or you cannot escape yourself from tax. You need to calculate your tax very carefully. So three question is probably most solved. Do you have a what is the taxable amount? That means what amount you need to pay your taxes. So the money you make each year, it is not all the is not everything taxable. So in the people usually think that I make $50,000. That means that I need to pay 50 tax of the whole amount, $50,000. This is actually not correct. So the tax-free income is $14,000 for 2022, And if you have also a wife and you file your tax return with your spouse, then your tax-free income will also be more. That means that probably 17 to 18,000 dollars you do not need to pay any taxes. So this is a good initiative by the Canadian and US government. So this actually varies. This actually varies in on a lot of things. Okay, fine. Uh, so people who actually want to file tax return, they just need to sign two form. So, and first of all, if you file your tax return in the past um, by another accountant, and you think that this year I need to go to that accountant because that accountant has all the information of you, but that is actually not correct. So I have the option to autofill my return. So I'm not gonna go and do it because it is a little bit secure and I don't want to show it to you. I can access all your information of your past notice of assessment and if you have any carry forward amount. So all of your information is saved on the server of Canadian server, and I can track down everything. Then you do not need to file tax return to the same accountant every year. You can go to any people. So probably people who actually lived before in their country, they have a misconception that I have a lot of information to my old accountant, and then I need to do file return to that guy. Otherwise, everything will be complicated. That's true. And I if you file tax return by me, then I will send you a digital signature request. So this is very important. Suppose you can ask me that your office, your home is very far from me, or I live in Surrey, or I live in Richmond, I cannot come to meet you. You do not need to come to meet with me at all because I will send you a digital Adobe digital signature signing request. So just I'm just make it more clarify how does it work. Yeah, fine, it's working. This digital signature Adobe digital signature sign-in request is the true form sent to you, and um, that means that you are authorizing me, so you will receive two form. This is the 183 form and authorizing form. So that means I am your legal representative, and all the information are filled up. Okay, and you just need to sign it. So when I will send it, when I will send it, suppose it has already been sent for signature. Okay, so what you just need to do, people who are little bit not tech savvy, they might have some problem how to do it. So you just need to log into your Google account, your the email address you provided to me, and just that means I send you a digital signature sign-in request, and just click on there. It is a little bit working very slow, sorry. So you just need to review and sign. So you do not need to come to meet with me to sign your document. So if you click on here, your name, such as my name is Rizwanul, IJWN Rizwanul Haq, and you just this is my name. You will type only your name, not my name. Okay. So if you click apply, then it actually process now. Then the signature actually sent to me. So when I will open my own Microsoft Outlook email, my tax puzzle solution email, so I will receive your digital signature. So you actually do not need to come to meet with me at all. And if you want, you can come because it is very time consuming to travel in Canada if you do not have a car. And you see that I received your Adobe Digital Signature sign in file, and I just need to save it to my computer because CRA usually might ask me in the future that did the customer give authorization to you or not. So it is actually done. So for filing tax return, and I just want to mention many things to people who are actually married, were actually single. So I'm actually single. I'm using a fake SIN number. It's not real due to security reason. So if I'm single, but if you are married, then you can file your tax return. So right now I have a 3418 refund, but if you file tax return with your spouse, then it will help you. It will actually help you to. Right now there you see that your refund amount has been increased from 4598 because your wife has a you have a wife, but actually I'm not gonna file tax return with my wife right now. But if you file tax return with your spouse, your tax refund amount will increase because government usually give incentive. Tax bracket usually becomes lower if you file tax return with your spouse. Okay, so I'm going back to my original entry. So married, I click single again, and student who are actually student. Okay, this is T4, and who are actually student, they need to file T2202 slip, and this is your tuition slip. So you need to bring all the tuition slip to me. So um, if you have any tuition credit, suppose every year you are paying tuition to your university. Suppose you study in UBC, and every year you are paying $20,000 to the university. So you studied 4 years, so 4 years maybe you will pay $80,000. So this is a non-refundable tax credit. So non-refundable tax credit means that Canada government will pay you 15% of $18,000. That means you will get $12,000, but you will not get it by check or cash or your bank account. That means that when you pay tax, when you start working in Canada, your company will deduct tax from you. Then you will actually get back the money when you start working. So suppose after 4 years you start working, and 1 year you paid $5,000 tax. Then if you have any non-refundable tax credit from your tuition amount, then you will get you will be refunded, but otherwise you will not get refunded. That means that you need to work, you need to pay tax, then the Canadian government will pay you back. So that's why I got a tax credit this amount. So uh, suppose if I add one more slip, fake slip, this is not real. So if I select UBC 2022, and if I mention amount, suppose $30,000. Okay, that is maximum amount. You need that my refund amount increases. So what does it mean? So I paid $30,000. So if I click on hit enter, and so you will see that what actually happens on here. Your tuition schedule textbook, uh, 18,000. Okay. So eligible tuition fees you paid this year is 41,000. So in at the end of the year, this is the unused federal carry forward future is $25,000. So this $25,000 will be carried forward for future year use. That means that you can deduct 50, you will get credit 15% of 25,000 to $19 in 2024. If you do work, then they will deduct your this will actually reduce your taxes. So it is a very helpful for students who are currently paying tuition. They will get a refund when they will start working in Canada. And also that if you are a student right now, first year, but you think that you are not working, but you still need to file tax return, because if you do not file tax return, then your tuition will not be carried forward, because every year you pay tuition and you need to file tax return and submit the documents to the CRA that I paid this year $20,000. So this $20,000 will be carried forward over again, 1 year, second year, third year, until you pay taxes for your job or for your employment, many or other things. Okay, fine. So this is how you can reduce. And if students who are actually filing tax return, if you file tax return, then it will actually help you in getting GST credit. So students usually do not have any income in Canada. Most of them usually do not have any income. They are actually bringing money from your own country. So if you file tax return, Canada government will give you GST credit of GST and climate action credit, and it could be up to $1,000, and it's a lot of money. So you must have to file taxes. So if you do not file tax return, you will not get the amount. And tax return is also good for your getting permanent residency in Canada, because this is a tax document, means that you stayed in Canada for that period, and this is a valid document. And what I can show you another thing that uh, if you work from home, then and and if you work from home, what I can say that I work from home 30 days in this year. So every day you will get a $2 tax credit. That means that if you work 200 days, you will get if I fill up 200, then you will get $400 tax credit, but you can maximum get $500 tax credit. That means that you can deduct $500 from your total income, that you do not need to pay any taxes. So this is also a very good thing. And I think that people who has a lot of income, what they can do, they can do RRSP, because RRSP has a lot of benefit that you can deduct it. So you make one more than $100,000, then you need to make contribution to RSP, or if you and your spouse both make a good income, then RSP can decrease your taxes. So if I select that, if I make one $10,000, the $10,000 means that my tax, you see, my tax refund, I'm getting more tax refund actually. So if I hit zero, it actually did not change, because I in T4 slip I actually showed more income. Okay, just let me T4 as my tuition T2202. So it actually so this $30,000 is zero. It should be actually zero. Now it decreases, and my RSP. Now, if I write down contribution to RRSP $10,000, you'll see that it is become $100. You are getting $100 benefit for your RRSP contribution. So this is also a very good way to reduce your taxes. And there is also a medical expense. So if you have any medical expense, so suppose you take an appointment to a doctor, and you paid fees, that means that and you did not have any insurance, that means that your insurance company actually did not make you any refund. So in that case, you can also deduct that amount from your medical. Okay, so these are the ways you can save a lot of money. You can save a lot of money, but remember that if you get your money from an insurance company, that means your insurance company reimburse you, then you cannot reduce that amount from your total taxable amount. So this is illegal. So, and you always need to provide me all of your uh, and always remember that do not make any false claim. And if you get money from insurance already paid for all eligible medical expenses. So you can reduce your tax, medical. You can, and if you have any rental income, that means that you own a home in Canada, and and you want to reduce your taxes, and you want to reduce your taxes. That means that you can also deduct the expense you actually made for your repair or something. That means that if you repair your homes, you repair your floor tiles or many other things, and you own the house, and you are not living in there. The condition is that you are not living in there, you rent it, and you are earning money by renting the home to other people. Then you can deduct the expenses. That this is how there's a lot of ways you can reduce your taxes. So people who actually don't have much idea, you need to go to a tax accountant. There's lots of free tax software. You can go TurboTax or many other things. But if you do not know all the terms of tax, then you will actually lose a lot of money, because I think that you need to file tax return to an accountant if you have a lot of property, or if you have just only salaried income that you don't have anything, then you can do it by yourself. But filing tax return by a professional is very good thing. So I think this is all. This is how there are lots of immigrants right now in Canada. I mean, most of the people are students on here. They're paying taxes for they're paying a lot of money for the tuition. So I think that you should claim your tax credit for your tuition right now, or filing tax return, and also GST credit. And whether you come to Canada, if you just live 1 month in the last 2022, you should file tax return. Though you are not resident, because if you do not live in a country for more than 183 days, but then you are not resident. But actually, you are like a deemed resident. Deemed resident means that your intention is to live Canada for a long time. That means people who are a student, that means that you want to stay here for a long time, and most of them actually want to get PR in Canada. And if you file tax return, you will actually get a lot of refund. So please do not forget to file tax return. It will actually help you, and it will actually help you to in future to not only to your legal status in Canada. So if you have any question, you can email me. My email address is info@taxpuzzle solution. You can visit my website, and if you have any query, you can just call me, and you can text me. I will reply you as much as possible. But I always try to help people who have actually less knowledge about the taxation, and I feel happy. I feel motivated when people ask me question, and I can share my knowledge to let them know what should they do. So I hope that the tax season has started. It will end on April 30th. The last day of tax filing is April 30th. So if you file your tax return early, then you will get your refund at the earliest time. And I just forgot to show one thing, that everybody need to log into my CRA account. So my CRA has a great tool. If you log into your My CRA account, then you can actually control your account by yourself, such as like if I just log into your My CRA account. I don't want to show you everything. If you log into your My CRA account, then there is a rental benefit of $500 in Canada. Then you can claim that $500 for rental benefit. It is actually very helpful. It is actually very helpful, and there is also child dental benefit and many other things. And if you have any lost checks from the CRA, uncashed check, because sometimes people lose their check from the CRA for the GST credit, then you can see whether have you received that check or not from the CRA, and you can claim it. You can claim it. So sometimes check is stolen by other people, and one of One of the guy told me that he did not receive any GST credit. I'm not sure how but you can really check your notice of assessment and many other things, and if there are any facilities. So I got $500 for rental benefit. So if your income is $20,000, if you are single, that means that if you have $20,000 or less for individual in a year, then you will get $500. And or if you have a family, if you have $35,000, then you have a $500 tax benefit. It will be directly deposited into your bank, and you can all apply from it from here. And what I can say that if you select on accounts and payment, my profile, if I select your my profile, then you can easily create your direct deposit option, create a direct deposit. So you can only open the MyCR account when you have your notice of assessment for the first time, but before that you cannot open the MyCR account. I can also do it by yourself, mentioning the mentioning your direct deposit from my software, but it is good that you did it by yourself because the money will ultimately go into your bank account. So if you do it, you can make money, you can have a good money, you can receive all your money directly into your bank account. So this is a good, very good thing. And in future, if you hear anything and is giving uh, this money or giving this benefit, then you can claim that benefit from the MyShare account. Okay, thank you everyone for watching my videos. I think that I tried to explain little to explain some basic ideas, some basic things of tax. If you have more question, you can let me know. I will try my best to um, answer you back. Yeah. Thank you for watching. Bye.